Look, we're back and I'm gonna turn you into a day trader. Now this is gonna be the beginner's guide to price action trading, and it's gonna get you started. After this video, you will literally be able to take trades just from what you're gonna learn here in under 10 minutes. All you gotta do is grab a pen, grab some paper, and let's get to work. Okay, so before we even get into the charting, I'm gonna walk you through the basics on how to get this set up right now. For myself personally, I'm using TradingView, and this is just a very simple charting platform and software to use on Google. You can use it on your phone, tablet, and you can even download the app as well. So what you're gonna do is just type in TradingView. We're gonna go straight to the website. It's gonna come up just like this. You're gonna type in whatever stock you wanna look at, crypto, Forex, whatever it may be. The software uses all of it. Absolutely free as well. You can upgrade it if you wanna get more indicators, things like that. But this is what it's gonna look like right here. So as you come in, we're just gonna go and look. All you're gonna see is your volume. You're gonna come over here and click your indicators right here to set up your new. And you're gonna type in opens, OPENS. That is it. And it's by We Run the Stops. Now, in case this indicator ever gets deleted, someone trashes it, something happens, I have the code saved. So this will always be available for everyone. So as long as it's here, this is the one that I will just use since it's already been made, and I want to give him the credit for it. And it's nothing super specific or algorithmic behind it. We're going to get right into it here in a sec. Now, when we're looking at the opens indicator, there are basically three levels you have to know: the monthly, the weekly, and then the daily. And this is the level of importance, specifically in that order. When you have your monthly level, that is going to be your strongest. And basically how I'm rating this is on a scale of 1 to 5. I would say your monthly is going to be your 5. It's going to be a very strong level. Very rarely do you not get a monthly retested, and very rarely is it not respected. The weekly is your bread and butter as far as day trading and scalping. It's going to be absolutely a trend setter and tell you the way your trade is going to end up going, whether it be to the up or to the downside. It's right behind it at a 4-star because it's just that important. Now, the weakest is going to be the purple line, which is still important, and you're going to be using this for quick ins and outs. So that is going to be the key thing here. The most important, in my opinion, for scalping type traders is going to be the green line, although again, the monthly is going to set the tone for the whole market and give you a viewpoint of how you should be trading in general. Coming back to the chart, what we're going to start with is show you a 15-minute viewpoint of how the market's been moving on the month. Since March 1st, right here, as you can see, you have respected that resistance and you have not gotten very far from it. You've only tracked about 100 points away from that level before getting pulled back below it each time. Every time you bounce up, you come right back below. It's like a magnet pulling you back beneath it. And what that's telling you is that it is setting the tone for a bearish trend of the market. So your friend is going to be trading to the downside. That's the way that you're going to be wanting to trade right now. If you're trading below the monthly, typically you're in a bearish trend and you want to favor to the downside. That does not mean you can't trade to the upside, but the downside is going to be your friend. All right, so far what we're doing is setting the trend. That is the basic beginning to this with using the monthly. We're using the monthly to monitor the overall trend. If tracking below, then our price action will be bearish and to the downside. And that's going to be our friend. And that's the trend that we're going to want to favor with our positions. And the same goes for the bull case. Now, can you trade reactions back towards the upside? Yes. But in most cases, like we're going to look at, it's going to be mainly and primarily to the downside. All right, so right now what we're going to do is just track what has happened for the month of March so far. And this has been one of the most volatile months, one of the most unpredictable, but I'm going to show you exactly why this case works so much. So as we come into this month, right here is where you start. You can see you're immediately starting a little to the upside, but right back to the downside, and things start to heat up. So off the bat, you can see what's going on here. Rejections, you come down below that weekly level, boom, rejection, shorting opportunity. Once again, comes back up, shorting opportunity, another $5 move to the downside, and then continuation back to the up. Now, once you start to break like this right here, you can see this is a clear break back above that monthly. Your trend is going to flip more to the bullish case. However, your weekly is still down here, so you're still in this level of uncertainty. So the only levels you're going to want to enter on is when you get touches of these regions here. So you start to push up, coming back down on the next day. As you can see, if you're grabbing right there at that monthly with somewhat loose stops, a little bit there, a little bit of that block, you have to pop back up, and that's over from 434 all the way back to almost 440 there. and then continuing back down. If you're looking to get back in this play, as you can see what's going on here, you see you come to that level, you bounce up, you're retesting. This would be your signal to get out of that trade, and you'd be looking for another type of retest. But as you can see, as we're trending, the next day you open below that weekly. This would not be a time to get in. You're coming below, trending down as you test back up. Once you're testing that level, because it's a reaction based trade, you're looking for a reaction and a retest of that zone. So as you can see right here, coming back, that would be your entry opportunity. You come down to start the day to the downside, retest, entering at 432, downside to 429, further downside 428, depending on how you're setting your stops. No matter what, you're making profit here. And the continuation just goes on and on and on. So you're setting those limits. You're coming here, 432 entries, coming back down to 430, depending how you're moving your stops as this is progressing. You're going to guarantee those profits even if you start pushing back up. So you're always going to want to start adjusting those levels and those profits. And you can see this goes on and on. So you come back up, breaking above. You may retest it, but you don't hold long enough for an entry. You come back down, retest here, entry immediately off that rejection, 432, again, right back down to 429. The pattern goes on and on. As you can see, if you were just using the strategy, you're catching every bit of downside as we're going. And if you're taking any losses from getting stopped out, they're very minimal, considerable to the actual downside that's forming here. So what I'm going over here is using the weekly to set that trend. So you already had the trend set with the monthly. You know, when you get below it, you're looking primarily for that downside pressure. You're not really looking for the upside movement. It's more of the downside because you're below your monthly. The trend is bearish. So we're using the weekly level, which will always be the framework of a majority of our trades. We aim to trade the tracking of the monthly, like I said, as it's going to the upside. If it's above the monthly, you're in a bull trend. If you're below the monthly, you're in a bearish trend. And then each touch of that weekly is going to be your entry zones. And you can see this happens quite often, usually multiple times throughout the week. And you're not about getting 40 to 50 trades a week. It's about getting high quality trades every single time you're getting in. You can also use scalp trades using the daily and going the opposite direction to the upside if you have to, but these are going to be less likely to be profitable. So the goal is to create a more profitable percent chance on each time you're entering a trade. However, you can use the strategy to the upside or going against the overall trend to still make money and get more trades if you want, but the percent chance of winning is always going to be lower when you're trading opposite to the monthly. So what we're going to use as an example is going to be this week and what's happening now. And you can see to start this week, you were below the monthly here, and you can see how this is actually working. So you start this week with some downside and then immediate pressure to the up. Now, as you come here and test your weekly for your entry at this range, we actually have that highlighted right here so you can see a little bit more clearly. As you are getting into that zone, you can see you'd be stopped out if you were in a long position to the upside. You have more downside, you come back up, you get a retest. This would typically be an area for getting puts. If you're looking to trade that, again, moving those stops, you'd be making money here, but you start to push back up. So as you're getting this retest here, this is a good example of how this could work and how this can be profitable. But for the most part, like I'm saying, it's definitely going to go against you. And this is going to be a less percent chance of winning because we don't have the highest percent chance across the board. You can see you come from this weekly all the way straight to that monthly, which would be a clear opportunity for an immediate put opportunity, which you ended up coming down from 335 all the way back down to 425 in a matter of hours, not even 3 to 4 hours. And then from there, you started to mount that monthly. And now the trend is flipping back to the bullish case. Even though we're having bad news overall coming out, you can still see the case on SPY right now is bullish. You can see you came back below. And then once you remount to that monthly right here, and you have continuously been making higher lows and higher highs across the board, starting this bullish trend, even though all fundamentals in the market tell us otherwise. In closing, the three main bullet points you need to be looking at is one, you're going to find the monthly, you're going to find your trend. If you're above it, you're looking at a bullish type trade. If you're below it, you're looking at a bearish type trade, puts, calls, shorts, longs, whatever it may be. Two, you're looking for weekly level touches. They're the key for your trades, and that is what's going to be statistically the most profitable and get you those wins. Number three, you are going to lose eventually, no matter what. Trades are always going to flip. Trends are always going to change. But one, it's about not going in against the trend. Two, it's about creating a risk to reward strategy that's going to continuously be profitable for yourself. For example, if I'm losing 1 out of 3 trades, I'm happy. that is a very good win percent chance. If I'm even losing one every other trade, I'm still winning more than I am losing based on the numbers of profitability and the actual profits going into each trade, because you're setting your stop losses and you're not being that aggressive based on these levels. This is all based on statistics and key price action areas where buyers are at every single time. Back test the theory for yourself and go look at the profitability and how this can help you win every single day. Now, I know that was a lot, and that is going to conclude our first overall lesson. I'll have more in-depth stuff coming along the way, but you can also keep checking out the channel for more information on day trading and getting you prepared every single day. More content will be coming. Thank you for listening. And if you have questions, comment down below. But as usual, I gotta get back to work.